company for almost 40 years. And Mr. Wagel, who has been on the board since the time I remember, they are retiring today from stepping down from the board of the company. We have just announced the results for the quarter ending June 30th. And as you have seen that this quarter, the quarter ending June, has been a difficult quarter for both the major industries that Mahindra & Mahindra is in, automotive as well as tractor. The tractor industry had a slight degrowth, and automotive also had a slight degrowth, though improving trend towards the end of the quarter. The same trend, in some sense, continues into July. The tractor industry had a larger degrowth in the month of July, and the automotive industry is beginning to see signs of turnaround. As a matter of fact, SIAM today, in its announcement, has improved the forecast for the growth of the automotive industry for the rest of this year. Within that, for Mahindra & Mahindra, on the tractor side, we had a slight growth and therefore increased our market share. On the automotive side, we had somewhat of an underperformance compared to the industry in terms of the volume drop being about 7 to 8%. We will talk about more details of specific sub-segments that Parthasarathy will cover. But on the financial side, in spite of stagnant volume in tractor side and a degrowth in the automotive side, we were able to maintain a profit margin more or less compared to the same quarter last year, and also have managed well on many other parameters on the financial side. And again, Mr. Parthasarathy will take you through the details. As we look forward for the rest of the year in the industry, we expect the tractor industry to grow at about 5% compared to the 8% that we had talked about in the previous meeting. And this is a result of delayed monsoon that we have seen, though the situation has improved right now, but there is already a loss of sowing, and therefore we would see less output, agriculture output this year. And on the automotive side, we expect to see a growth somewhere between 5 to 10% overall for the passenger car segment or passenger vehicle segment, though for commercial vehicle segment, we do expect that it will be sort of difficult next 6 months, and we should start seeing a growth after about 6 months. So we expect to see more or less volume maintained for the industry for 6 months and then start growing. For Mahindra, we have some major launches that are coming that will be starting from next month in the various segments, the tractor segment, the two-wheeler segment, and the automotive segment. We will talk a little bit about it, but not too much about the launches. And from there, we take on. So with that, Partha, leave it to you to walk them through.
Is the mic on? Yeah. Thank you, Pawan. And with that somber setting of two of our board's travel today, bidding you, I will, it sets the scene for talking about our Q1 meet. Welcome to the Q1 FY15 press meet. I will, today's part of it, cover the economic environment in a very brief manner. Auto and FES overview we will cover. Of course, the financials for Q1 and some subsidiaries, the report card on them. So, overall, the economic and business scenario. If you look at the amount of red dots that they were there towards Q3 of last year to Q4, and if you come to Q1 of this year, you find that many of them red dots is becoming orange and some of them yellow. So showing that overall there are many positive green shoots that are being seen. However, on two fronts, there is still a little bit cause for worry. The monsoon, which had about 22% negative deficit, but in the last week or so, there seems to be some improvement, and on top of it, it is predicted that the next week or so, it will improve further. So while there are little bit of still silver lining, monsoon is a small cause for worry, and consequently, combined with it, the industry growth on tractor is something which is coming off of what was expected to be to 8% or so growth. In terms of overall industry overview, Pawan briefly touched on this. Overall industry growth is flat after 5 quarters of degrowth, and that's at least the trend is positive. Swing from minus 11.7% in Q4 to just about flat in Q1 F15. Car is showing growth after 2 quarters, and it is also showing 2 months of continuous growth after exactly 2 years. UV has seen a positive growth after 3 quarters, and PV has shown growth after 5 quarters this year. And commercial vehicle less than 3.5 ton, degrowth continues for the 5th quarter. And HCV, 3 months of positive growth, and this is a very healthy signal that we are seeing some momentum in the HCV segment. And this is after 24 months of consecutive degrowth. In terms of M&M highlights, first in the auto segment, pickup has seen a consistent gain in market share. In fact, when I saw the figures, it read 58% last year at the same time and 76% this year, which is a whopping improvement in the market share. Okay, I just wanted to recheck those figures because it seems so dramatic, but that's the kind of volume, and this is a fairly large segment for the auto sector. The second one is XUV 500 did 100,000 vehicles cumulatively since its launch, and this year had a growth of 3,000, and in the quarter the volume growth has been 50% plus as compared to the previous year. Exports overall grew very well at 37%, and medium and heavy commercial vehicles had a growth of 62% in the quarter as compared to the previous year. Coming to farm equipment sector, as you can see that every quarter, full of last year, there has been growth quarters, and we have grown better than the market. And this quarter was no difference. We grew better than the market, but unfortunately overall the market degrew in Q1 marginally. But our market share was the highest at 42.2, and this is, since if you can look back, it's for the past 10 quarters, it's the highest market share at 42.2%. In agribusiness, it was once again a very good quarter with 23% growth. This is on top of last quarter where I shared you where it was just a 30% plus growth. And within that, fruit and vegetable grew 31%, and there is a big focus in looking at new segments in the agri value chain, both on pulses and dairy.